Thanks, everyone. Good to see so many faces here this year. I think it's a good sign of things to come. I always get slightly afraid when I talk to Eric or Jay or anybody else that understands macroeconomics better than I do, because everything sounds terrible, but good for gold in this case. So I think if you think about Great Bear a little bit, probably the best way to talk about it is what would happen if you had all these ideas about a project and putting a company together and the whole thing, and it all worked. So in our case, we feel privileged to be involved in a project like this, and I feel privileged on a day-to-day basis to be with the guys that you see in the picture there behind me. That's some of our field crew from Red Lake, and I think from the point of view of guys like Bob, myself, John Robbins, guys that have been involved with this company for a long time, when I go to site right now, it's quite interesting because a few months ago when I was there, I was going into the back of that particular core shack. There's 3 of them now. And one of the guys was like, sir, I'm sorry, you can't go back there. That's public. That's not public information. I was like, well, okay. So you have to listen. But it's a sign of a project that's growing rapidly, doing very well. And I'll walk over just some of that success today. So forward-looking statement, take everything with a bit of a grain of salt. We are making forward-looking projections here. So some of the basic details on Great Bear, which have worked to our advantage over time. 100% owned project here in the Red Lake District of Ontario. We were very careful when we got involved in the project that we wanted to buy out all the divided ownership and the royalties and everything else, and that's given us some huge opportunities now for shareholders. So, for instance, when we did the original deal on the project, we had Newmont that owned a 33% interest in the project, and we bought them out early before we even put a drill hole in, and I think it's probably a little bit famous now, but it was $80,000 to buy out 33% interest in this project. So in terms of return on investment, that's been phenomenal. The other thing was also buying out the royalties on the project, and I'll talk about that in a little bit now, because most properties and sort of mineral deposits of this size have existing royalties on them, and this is simply a function of the fact that this is not year one of geological exploration. There has been advanced exploration across the globe for many years now. So most of the big deposits have had a sequence of owners on them, and those owners have typically demanded royalties. When they part with the project, they keep some additional exposure to the property. So what we're doing here with Great Bear is we're going to take and add a 2% royalty to the project and spin that out to our shareholders. Because, I don't have a crystal ball. I've said this before. I don't know what the future of the project is going to be. I don't know whether we exist, a year from now, 6 months from now, because if we find as much gold as it looks like we're finding, it's the kind of thing that might develop into what's colloquially known as a Tier 1 asset. And if that's the case, those are all owned and operated by major producers, of which Great Bear is not. So I would imagine that what we can do here to make sure that we're benefiting our shareholders over the long term is put that royalty on the project and make sure that we spin out the ownership directly to our shareholders. I'm a shareholder, Eric's a shareholder. Most of the guys that we know that have been involved in the story, they would love to see this happen because we think it could be quite valuable. So during the process, the exploration cycle, we're still only sitting at 46 million shares issued and outstanding after, in our case, drilling hundreds of holes soon to be and raising tens of millions of dollars. So it's been a highly effective discovery-driven process. What we're going to see this year is a 200,000 meter drill program. This program keeps expanding. This year, minimally, there'll be over, let's put this in general terms, over 110 kilometers of drill core completed on the project. This could be as high as, or higher than 150 kilometers of drilling. And if you can imagine what that would look like laid out end to end, because I saw an analogy like this just earlier on in the presentations, you could drive a very long way if you lined all that core up back to back. So it's a lot of drilling, a lot of data that's being generated, and I'll talk a little bit about that shortly. And of course, we've completed some good financings recently, so we're funded all the way through until next year. So where are we? We're in the Red Lake District of Ontario. We're right off the highway. Literally all the gold that we're drilling is within 1 kilometer to 3 kilometers of a paved highway. There's a high tension power line that runs over it that feeds power to the entire district. And nearby, there's been a lot of interest recently in Red Lake because Evolution Mining, the Australian group, bought the Red Lake mine from Newmont/Goldcorp. And obviously, that's been of interest to the general market. They put out an end of year or an acquisition-based letter, and it showed, for instance, a sort of bullseye pattern of deposits that were available near that mine. And obviously, we're just down the highway. It's about a 15-minute drive. Now, the bigger we get, I think the less important it is to us what else sits around us in terms of how much gold we know there to be in the ground. But it's always an advantage to be at an active mining district with ongoing operations and to be close to those existing operations. So it's the kind of thing that has benefited us right from the beginning. Share price performance, I could have put a chart up from a few years. We were a top performing company last year. I believe we'll probably be recognized as one this year as well. This is a function of the technical success of the company and the fact that we've been additionally successful in the market at raising money at successively higher valuations. It keeps the dilution very much under control. On that note, we're sitting now with about $30 million of cash in the bank and very few warrants left over in the company from some of our early financings. The majority of those are owned by a handful of people at this point, so we can reasonably expect that money to come in. The royalty spinco, this is quite an interesting point for us because that 2% royalty, the question is, what could it be worth? Well, when you look at some of these large royalty companies that are out there in the market, Franco-Nevada, Wheaton, Royal Gold, Osisko Royalties, these all originated based on producing high quality sort of tier one type assets. And we believe that's what we're sitting here with Great Bear, and that's the proof that we have going forward. So people say, well, what is going to be the value of that royalty over time? I couldn't tell you right now. It's very early days with the project. We don't have a royalty, we don't have a resource even defined yet, but we think over the future we might as well be exposing our shareholders to this potential for growth, and that's why we're going down that road. So what do we have here in Red Lake? Well, disseminated high-grade gold, and we see this in this LP fault target. It's many kilometers long. We've drilled over 4 kilometers of it now so far, and beside that we have these Red Lake-style high-grade golden veins. So this is not primarily a vein-type project like most of what you see in Red Lake, although it also has those zones in it. Primarily, this is something that might be more similar to a Hemlo-type deposit, a disseminated high-grade gold deposit with significant strike length. This is what the gold actually looks like when you're looking at it in thin section. It's free gold in the rock. What that means is that for future extraction, it's likely going to be very good. This is the distribution of gold in most of the deposits locally, and they end up with, in their cases, mid 90% or higher recoveries. We see a similar distribution of gold. We're very optimistic about that. If you look at the project as a whole, it's over 20 kilometers long. The yellow band of rocks is mostly what we're drilling at the moment, the LP fault target. There's over 4 kilometers of that we have drilled off. You can see some of the results. Very high-grade gold in the LP fault, right to surface, surrounded by bulk tonnage intervals that also go right to surface. So what does this mean? Is that section after section with what you're looking at here, so you see continuity of mineralization, continuity of grade. The drilling that we're doing right now is designed to prove this, and this is really what we'd like to show shareholders this year, is that the gaps in the existing drilling that we have are going to be filled in, and we think right now it's looking like excellent continuity on the system. This is what it looks like in cross-section when you go across the entire property. A big fault zone in the middle, big deformation zone. This is a ductile brittle transitional deformation zone, hundreds of meters wide. Huge amounts of fluid flowed through this, a big alteration zone. The widest we've seen the alteration is about 1 kilometer across that fault in the middle so far. And beside that, symmetrically arranged, you get these other rock types, these mafic rocks, and they end up with the Red Lake-style vein systems. So multi-types of gold deposition that we see in here, but the center of the project, this big fault zone, is this LP fault, and that's what we're looking at. Visually, that's what it looks like, disseminated high-grade gold in the middle with these big bulk tonnage type intervals, and the high-grade golden veins within the mafic rocks that surround that. What are we going to be doing? I think this is an important slide for understanding what you're going to see in upcoming news flow. If you look at that, that's about a 5 kilometer long sheet of mineralization that we're currently drilling off. And I have a hard time generally conveying the scale of these things, and I don't have a lot of time to do it now. I guess I'll be doing some in the Q&A afterwards. But this year, we have to drill that sheet off. What'll that mean if that's successfully defined? Well, this is a same scale image of kind of the Hemlo deposit. And this is a 23 million ounce deposit, which is disseminated high-grade gold, localized along a flexure, along a big fault like what we're dealing with right now. There's the same image. The dark gray that you see at the top is what we've currently got drilled or are drilling along the LP fault. And there's a projection down to 1,500 meters depth of what you had, say, for instance, at Hemlo. Because it's similar geologically, it's one that we're looking at as a close parallel, not exactly the same. Here's another example, the Canadian Malartic deposit. Again, you have here development of close to 20 million ounces of gold. This was a massive acquisition. It was over $3 billion when this was acquired, but it's Canada's biggest open pit mine, about 12 million ounces of about a gram. That pit would fit roughly along the same strike length of what we're drilling now along the LP fault. So, very early days for the company. There's some analysts that are trying to predict about what we could be worth on a per share basis. Generally, this is based on sort of 1 to 4 million ounces of gold. I would just say from my point of view that we don't have the resource defined yet, but that's something that we're working on. Presumably publication of that number by early next year, probably about this time next year. The thing is, with a target that's 4 or 5 kilometers long, that central area of the project, it takes a long time to drill it off. So even though we have the money to do it and the budget to do it, and you'll be seeing a huge number of drill results coming out this year, it still takes about a year to get all that together, just drilling even as rapidly as you can. And just as I part with you, just some of these gold numbers, and I'll keep this very brief because I know I'm over time now, but in this area, generally economically, you want to see about 10 grams per ton over about 2 meters of width. That's what most of the local mining is targeting. So you multiply the width by the grade and you get the column on the right. And if you can see these numbers, you can see that I just ranked sort of the top 25 or so drill holes that we've come out with in the last year. Basically, these are all within about the last year, year and a half of drilling. And you can see we have no trouble developing those kind of intercepts. So looking at that and just going through it, you'll also notice that there's multiple zones of mineralization in most of these holes. So it's been a very good run for us. We're anticipating lots of numbers like these going forward, and this is basically what you're going to get. You're going to get a big drill program, distribution of the royalties, further definition of this big bulk tonnage and high-grade zone that goes right to the surface, and just pay attention through the year. I think it's going to be probably the most exciting, most progressive year for Great Bear yet. And that's it. Thanks very much.